Hello everyone, George DeSantis here. Um, it's October 22nd. Trading is done for the day. I didn't get to do the video on the weekend, so I thought I'd do some version of it here. Uh, so take a look at the disclaimer as usual. Where is it here? And be advised that this is not an attempt to give professional investment advice. Um, it is for educational purposes only. So let's take a look at some charts, and it's always wise to start with the weekly chart first. Uh, of course, this bar here represents this week's data, but it's just today's data as well, so we got to keep that in mind. So we can't really put much faith in the structure of this bar here. However, what we do see is that the 4 EMA crossed below the 9, and the 9 is just about touching the 30 weighted moving average here. So insofar as moving averages go, the trend has really turned and begun to go down. Now we can also notice that as far as the Fibonacci levels are concerned, the Fibonacci retracement levels, I drew Fibonacci retracements from this low, right, to this high, and we have the 50% level right here. Let's see if we could get this. Yeah, the 50% level is right here at 2740. Okay, and now we're at 2755.88. So we have the bars, the recent bars closing, including this one here, closing, including today, closing between the 38.2 and the 50% retracement levels. One might say we're sort of basing or consolidating this pullback, and we don't know how much further down we'll go because there's a real chance we can break below this 50-day moving average. I mean, there's no law that says we can't go further down. I'll tell you why I don't think we're going to go much further down, but let's take a look at some of the other indicators here. For example, MACD, we know we had that big divergence of MACD. We saw this divergence here. And since then, we've pulled all the way back. So MACD was telling us, beware, beware, this market is losing strength. The bears are getting stronger. And you can see that we fell below the zero line, so the bears are pulling the bulls down. If we go to the other 2 or 3 indicators here, RSI 12, we're just about at the 40% line. And on Williams percentile with a 30-day period, we can say about the same thing here for the 50% line. We're just about focused on the 50% line. As far as the sum of the rate of change indicator is concerned, it fell below the 4% line. So what do we gather from the weekly chart? The weekly chart had this significant pullback. Whether it was 6 or 8%, I forget now. But we have this pullback. We seem to be consolidating this loss, if you wish, between the 38 and the 50% line. But there's no reason that this thing can't go further down and go down to the 618, the golden rule. This line here would be 61.8%. Let's take a look at the daily chart. So on this daily chart, you could see that 4 EMA crossed below the 9 right here, and that was way back on October 4th. And I often use the crossing of the 4 below the 9 as a sell signal, although I take other things into consideration as well. But you can see that was the beginning of this waterfall here. So now we're hovering around the 200-day moving average on the daily chart. We're just closing again below the 200-day moving average. So I think we have to respect this 200-day average, and if in fact we can't hold there, this thing could go much lower. The next level down would be 2,700 or so. This would be the 618 level would be 2,700. Let's hope we don't get there. Now, if we go to the MACD on the daily chart, you can see that it made this low, and since then it's been trending up slightly. So that's encouraging from a bullish standpoint. Bears are getting somewhat weaker, one might say. Insofar as RSI 12 is concerned, you can see it broke below the 40% line here, and Williams percent broke below the 50% line here. So all of these things were foretelling this pullback that we had. Let's take a look at some other charts. Here's the SPX S&P 500 on the seasonal chart of Best Choice. Now, what I did was change the minimum number of days to 56 instead of the usual 14, just to see what sort of trend we'll get here. Now, when I did that, what we got is an 84% win percentage with a 3% profit average for a trade between October 25th and December 24th, from here to here. And that's been so for 11 out of 13 years, 84% of the time. So that is insofar as the seasonal trend is concerned, seasonal trade is concerned. And this is one of the reasons that I say I'm expecting this market to do what it's done for so many years, to trend up and into the end of the year. Now, if I change the minimum number of days to 14, we get 100% win accuracy, okay, with a 3% average profit. So that's this is why I say I think we're going to get this trend into the end of the year. Now, when we turn to the three-line chart, which is a regression channel, we find that, of course, as we would expect, that the S&P is very, very oversold. So we are hoping, of course, that we continue to now wend our way back up here. We have a ways to do. There's a lot of work to do on this side here because it's very oversold. Now on the Shaken Analytics software, what we're looking at here is the SPY, which is the ETF of the S&P 500, because they don't plot the S&P 500, they use the SPY. And what you can see is that very oversold condition here. You can see if we look at the money flow has been negative for some while now. You can see it is oversold, so we've seen that here. And the relative strength compared to the Russell 3000, I think it is, IWV, it's performing better than the Russell. But notice that the Shaken power gauge turned neutral. It was bullish all the way from here to here, but it just recently turned neutral, I would imagine, when it crossed below this 200-day line here. Now, in an email, I mentioned to you that I bought back some of the stocks that I've owned for a while. And so these are the stocks here: Adobe, Microsoft, Visa, Apple, Ross Stores. These are some of the ones that I own. And there are a few others. There's Facebook. I don't own Facebook right now. And FFTY. But you can see that today, even though the market was down, the Dow was down 126 and the S&P was down 11, these stocks tended to trend up. They had a gain. So I'm encouraged by that. Of course, since I bought them, I have a small percentage loss because it went up and then down, and so I have a little loss on them so far. But I expect them to lead the market up again. So let's see what else we can take a look at. So let's take a look at some of those stocks on the TC2000 software. And you can see that as far as Adobe is concerned, it came pretty close to the 200-day moving average this here, 200-day moving average. And it seemed to be trending up a little bit. We now have an inside bar or harami on the candlestick patterns. So I like that. That's bullish. Let's take a look at something else. Here's Microsoft. These are daily charts. You can see again Microsoft as well. It pulled all the way back here and it's slowly working its way up again. And I like the fact that MACD is trending up. So you can say that bulls are getting a little stronger here. Bears are getting weaker. And the other indicators at the bottom of the chart look more bullish than they did before. They're sort of trending up a bit. Here's Apple. Apple didn't pull back a whole lot. You can see that here. Found some nice support at the 50-day moving average, the 50-day exponential moving average. And so today was up half a percentage point or so. So it looks pretty good. And you can see that MACD is trending up a little again. And these indicators are also trending up. And here's Salesforce. Now, these stocks have some work to do to get back up to where they were. But today, we had, on this daily chart, we had a harami, a bullish harami inside bar. You can see this, the body of this bar is totally engulfed by this. MACD trending up. So it looks very similar to some of the other ones that I've looked at. Here's Visa, a similar pattern again. You can see MACD trending up here. Bulls are getting a little stronger, bears getting weaker. Let me just get rid of some of these alerts. And you can see some of these indicators sort of trending up again. So Visa seems to be one of those stocks that seem to have found a bottom and look to be trending up again. Let's hope so. Here's Ross Stores. This one didn't pull back much at all. And today it closed with a bullish harami, so I like that. And you can see MACD trending up here. So those are the charts that I'm looking at here for some of the stocks that I bought back. I'm going to call it a night. I hope you have a good week, and I'm trying to recover from my, back, the painful back that I have, and we'll try to do this at the end of the week again. Bye.